welcome back to another video on my channel. In today's video I'm going to be doing another trade recap, okay, on one of the live trades I took about 10 minutes ago on Nasdaq using the inversion fair value gap model. Those of you that have been subscribed for a while will know that this is the model that I trade. If not, then make sure to subscribe to the channel, like this video so you can come back to it, and practice this strategy. I've got lots of videos on my channel, as you can see, on this strategy and how you can actually learn it and become profitable. So let's get straight into it. So you can see we've got Nasdaq and ES open. So for those of you, like I say, that have been subscribed, you'll know that we use SMTs, inversion fair value gaps, and equals as our target. So as long as we've got some of these in the trade and it looks clean enough, then we can enter. So as you can see on Nasdaq, we've been extremely bearish. Okay, all day today we've just been dropping and dropping and dropping. So again, I was looking for sells. Now mark below here is a 4 hourly fair value gap. So for me now, this is my draw on liquidity, okay, because we haven't filled this, there's no other fair value gaps here. So this was my draw on liquidity coming into the trade, as well as we've been dropping. So we look bearish. To get to here, we need to be bearish. So that was where my my bias came from. So I was bearish. Now, as you can see, we were dropping in price. So if I just play price through, this is where I'm going to now look for an entry model, because obviously we can't just jump into a trade anywhere. We need an entry model, and it needs to look clean enough to enter with a stop loss and a target. So we were just dropping. I was being patient here, and I was waiting for a bullish move up that we could inverse. Okay, and now here we get it. Okay, so you can see here we get this bullish move up. We know we're massively bearish, and we know, well, me personally, my draw on liquidity today, my bias is down. We're going to this level, this blue box. Okay, so now we get this. We're left behind this bullish fair value gap, just there. Okay, so we mark that up, and now we're looking for an inversion. But like I said at the start of the video, we want to look for more confluences. So at this point here, you can see we've got ES. This high is that high on ES. So this candle correlates to this candle. Okay. Now you can see that on Nasdaq, okay, we actually swept this internal high there. Okay. So here we had a bearish SMT, whereas on ES you can see we didn't sweep. We actually formed equal highs. So that there is a bearish SMT. Now, what an SMT means is it's just a smart money technique that the market makers use, and it essentially just gives you an extra confluence to take a trade in a certain direction. So with this being a bearish SMT, it means that bearish moves are more likely to happen following on from this SMT. Obviously, if it was bullish, bullish moves that are going to be more probable to happen. So this all ties in perfectly as I'm looking for sells, and we've just had a bearish SMT. And we've also got a bullish fair value gap, and we've got a clear draw on liquidity. So for me now, I've got no other confluences I need. I've got my draw, I've got an SMT, and I've got a fair value gap that can be inversed. Now, there's no other fair value gap on any other time frame. Okay, there's a 2 minute, so we need to mark that out. Okay, now you go to the 3 minute. Is there any more? Okay, so there's a 3 minute, a small one, and there's no 4 minute. So we go to the highest time frame and we wait for a 3 minute candle close below this bullish fair value gap. Now you're probably thinking, okay, it's tiny, the fair value gap is tiny, but it doesn't matter. Okay, as long as that is the highest time frame we've got with a fair value gap. So as long as it inverses on the 3 minute, then we've inversed on all the other time frames. That means we'll inverse on the 2 and the 1. Now we just play price through. We've got a bearish SMT. All we need to do now is wait for the inversion. You can see the next candle we close inside. The next candle we inverse. Now we didn't actually take any internal liquidity, so that would be, your TP1 as such, and here we just enter a trade. So now we enter a short position. We've got a bearish SMT. We've now inversed the bearish fair value gap. So we enter with a stop loss above the bearish fair value gap, and our TP is just going to be tapping in to that forward heavily bullish fair value gap, because we know that's the draw. We don't know where it's going to go in the fair value gap, so we just target, the start of the fair value gap. A 2.8 risk to reward. This is your TP1, so you can either go break even or close some partials here if you want, depending on how you trade. And as you can see, we come back up, we tap into the inversion fair value gap, which is totally fine, because those of you that watch the channel know that we don't set a stop loss, we manually close the trade if we get a candle close back above. So a full body has to close above the fair value gap. So a wick is fine, we didn't get stopped out. And then we smash through, the take profit point if you do want to take partials there. And then a couple of candles later, we smash straight down and get full TP. Now, that is literally the A+ setup that you need to be taking. This is the setup that can make you profitable. You can use it for the rest of your life. This is the A+ setup. You've got everything included. Like I say, you've got the SMT, you've got the draw on liquidity, and you've got an inversion fair value gap. That is all you need to become a profitable trader this year. So yeah, that's the full trade. 2.8 risk to reward. You would have made 2.5 to 3% on that trade. So yeah, that's the end of the video. If you did enjoy the video, please like, subscribe to my channel. We're so close to 100 subscribers, and I'll catch you on the next video.